Hey everyone, welcome back to the channel. Today we're diving into one of the most powerful institutions in the United States, and yet one of the least understood, the Federal Reserve. What is it? What does it actually do? And how does it impact your wallet? Stick around because we're breaking it all down. Section 1. What is the Federal Reserve? The Federal Reserve, often just called the Fed, is the central bank of the United States. It was created in 1913 by the Federal Reserve Act, signed into law by President Woodrow Wilson. The main goal? To bring stability to an economy that was facing frequent financial panics, bank failures, and unstable currency. Section 2. Why was it created? Before the Fed, the U.S. banking system was chaotic. There were hundreds of banks, each printing their own money, and economic panics would spread like wildfire. In fact, the Panic of 1907 was so severe, it convinced lawmakers something had to change. The Federal Reserve was created to act as a lender of last resort, meaning it could provide emergency funds to banks in trouble and to oversee the money supply. Section 3. How is the Fed structured? The Federal Reserve isn't just one place. It's a system. It has three key components. The Board of Governors. Based in Washington, D.C., this is a group of 7 people appointed by the President and confirmed by the Senate. 12 regional Federal Reserve banks, located in cities like New York, San Francisco, and Chicago. These banks operate independently, but are overseen by the board. The Federal Open Market Committee. This group makes key decisions about interest rates and money supply. It includes the 7 board members and 5 of the regional bank presidents. Section 4. What does the Fed actually do? The Federal Reserve has 4 main functions: monetary policy. The Fed adjusts interest rates and manages money supply to promote maximum employment and stable prices. Regulating banks. It supervises and regulates banks to ensure the safety of the U.S. banking system. Financial stability. The Fed steps in during crises to maintain stability, like in 2008 or 2020. Payment systems. It helps ensure the smooth operation of payment systems like checks and wire transfers. Section 5. How does it affect you? So why should you care about the Fed? Simple. Because it impacts your daily life. When the Fed raises or lowers interest rates, your credit card payments, mortgage, and student loans get affected. The Fed's actions can influence inflation, which affects your grocery bill. It even impacts job markets, investment returns, and housing prices. Section 6. Is the Fed part of the government? Great question. The Fed is what we call independent within the government. That means it was created by Congress and reports to it, but it makes decisions independently, without needing approval from the President or Congress. Section 7. Controversies and criticisms. Of course, the Fed isn't without critics. Some say it has too much power. Others argue it hasn't done enough to prevent inflation or economic inequality. But love it or hate it, the Fed plays a huge role in how the U.S. economy functions. So the next time you hear about an interest rate hike or inflation report, you'll know the Federal Reserve is behind the scenes, pulling some very important strings. If you found this video helpful, drop a like, share it with a friend, and subscribe for more breakdowns of complex topics made simple.